The birth of a brand new AI wave has just begun. We cover the stocks in the US and down under on the ASX that you need to watch and maybe consider, plus why you ought to maybe consider a position in Qantas. My name is Jessica Amir, a market strategist here with Mumu. Thanks for your company. Well, we saw US stocks in the US surge to brand new record all-time high territory overnight, largely for two key reasons. Firstly, it was thanks to Trump's launch of that $500 billion AI project called Stargate, which ignited a new wave of AI investment and fresh buying into AI-related stocks. Names like Oracle, Palantir, and Molantific Power Systems saw their shares surge between 5 and 8% overnight. Secondly, lots of buying was taking place into consumer names, particularly Netflix, after Netflix's shares jumped 10%, and that's revived good sentiment in the sector. Now, also, we need to really seriously consider that new AI wave of investment that has just been born. And this is why you haven't missed the boat in the AI thematic. Now, it's clear that investors not only are gaining fresh confidence in the consumer-facing companies such as Netflix, but they're also gaining revived AI firm sentiment. This has been given a huge shot of adrenaline. So we've seen Nvidia's market cap surged by $310 billion in 1 week. Palantir's market value has grown by $27 billion also in 1 week. Down under here in Australia, Aussie stocks are also seeing huge surges of newfound love and interest. Nextdc on the ASX rising by 900 million. Brainchip has risen by 15 million, and those valuation jumps just over the past week. Exceptional stuff. But early thinking is that Oracle is probably going to be the biggest beneficiary of Stargate's project with that JV between Oracle, OpenAI, and SoftBank. Here's a look at Oracle's share chart. What do you need to consider? Oracle's cloud infrastructure sales, they are expected to now expand monumentally. Now, for context, why am I saying this? Well, we already know that Oracle is well behind Amazon's AWS and Microsoft and Google's growth. So that's why Oracle's growth multiples could be monumental. So big that Bloomberg Intelligence sees Oracle's cloud business infrastructure sales growing at 10 billion annually, and that could triple or quadruple to 30 to 40 billion in 3 to 4 years. Right now, 100 billion is expected to be deployed into the project, and at least 100, or rather at least 500 billion US is expected to go into the project, and that's of course over the next 4 years, all to expand US AI infrastructure. So Oracle should be considered as a potential investment. Also consider Microsoft. Microsoft has revised its partnership with OpenAI to right through to 2030. That's when their contract is. So Microsoft will also benefit. Also consider that Nvidia is going to benefit from that because Nvidia is the key supplier of Microsoft's chips. As for potential AI and tech investments down under that could benefit from revised optimism, keep an eye on Megaport MP1. Zooming out though, also consider software companies that are probably going to see a pickup in sentiment and confidence. So watch names like Palantir, Salesforce, Workday, and Adobe. In Australia, maybe watch Technology One as well. WiseTech thinking a little bit differently, and also Xero as well. Meanwhile, if you are looking for diversification, the plot is really begin to thicken and pick up for maybe adding gold to your portfolio. Now, gold has neared a all-time high, and belief is that gold buying is probably going to pick up ahead of course, Lunar New Year, and concerns about debt in the US. The debt ceiling is about to hit a new limit. Now, gold stocks on the ASX, such as Emerald Resources, are hitting new all-time highs. While we've got a chart here to show Regis Resources, their shares are roaring up. So they are a leader today on the ASX, and their shares have now hit their highest level in about 4 years. So well done to those of you invested in that company. Another stock to consider is Qantas. Qantas shares hit a brand new record all-time high, and you might be expecting more record highs ahead for a gamut of reasons. Now, media are asking me, why am I saying this? Why is Jessica Amir saying this? Well, one of those key reasons is that Qantas makes a lot of money from selling points to credit card companies, and they also sell points to other businesses so that those businesses can entice customers onto their business. Now, secondly, we know that Qantas is expanding that part of its business. And thirdly, yesterday, Qantas announced that they're going to increase the number of points members can earn on domestic flights by up to 25%. And they're also going to remove caps on points that you can earn in premium cabins, as in premium economy, etc., business class, etc. So what will this impact? Well, this will positively deliver about 4 billion extra points each year to Qantas. Obviously, that means Qantas will be attracting a lot more customers, a lot more bums on seats, and they'll be selling a lot more points to other businesses. So their revenue is expected to materially pick up. There's plenty for you to consider, not just for today, but for the long term. I'm Jessica Amir, market strategist here with Mumu. Thanks for your company.